Friday. Let's hope we can end this week on a positive note. Let's take a look at some women centric stocks and shopping. First up, Elf, definitely one of my big bet going into year end. Um, I was able to put on a call spread. The call spread was 110, 145. So I can't remember how much I paid for that call spread, but of course maximum profit would be if the stock is 145 or higher in 2 weeks. Right, so for now it's doing well. Certainly it's in the profit, as well as, well, of course, for those who remember, I bought some share here, I bought more down here. It was painful, but now it's okay. And as far as the share that I have, would I trim here? No. I do believe in ELF. I do think that we will see the 200 in the next couple of weeks. And when and if we see the 200 MA, sometime somewhere in the mid 150, if it's lined up with this fib right here, that would be a perfect time to say bye bye, thank you, in the money, in the profit, all the way around, damage avoided. All right, so for now it's still my top pick for women centric stock. Now let's go down the list. ULTA, right? The Warren Buffett news that he came in. The Warren Buffett knew that he went out. Isn't that a miracle that gap up on Warren Buffett? Keep in mind, he's not always the one making the decision to buy and sell something. Even he said it himself a few times on CNBC. He has a team. Sometimes his team buy things that it's not his decision. Regardless, gap up on Warren Buffett and fall down and fill the gap on the news that he exit. Not a surprise, right? TA still is king. And if you are a fan of TA and bought it on the gap, on the slide to fill the gap, then congratulations. You get yourself a 20% return already. Yes, a 20% return. Wow. In 2 weeks. Yeah, in your face, Warren Buffett. In your face, okay? The old man is not always right. Just look at Bank of America. It's a lot higher than, okay? Warren Buffett is great. I'm not saying he's not great. But please, don't just do everything he does. You can buy his stock. Just buy Berkshire Hathaway. It is a great return. But anyhow, would I hold on to ULTA right here? No. I would say if you have it, congratulations on your 20% gain, and trim some more up there for sure. If you're not trimming here, for right up there. See this? You see this? You see this? Yeah. It's very clear where the resistance is, right? Until the story change, until there is some kind of development that women are not shaving their heads, not moving to 4B in mass, then that could be the upper range right now. So yeah, the risk reward is not as good compared to down here, right? COTY, I like COTY. I like COTY here, right? So if you are a fan of ELF, and I personally think I might buy some COTY myself. I like ELF. I have not bought COTY. COTY definitely got the nasty tax year-end tax loss, right? Look, and it took. Okay, so here's a tax loss, right here. Okay, that's it. That's a tax loss the last week of October, and then you get the earning, which was not all that great, but they made money. They made money. Okay, and it come down. Key right here. This fib is the 161, right? If you do a fib retracement, it does have the fib low to see what the bottom range is, and it bounced off that fib like a champ, like a champ. I wish I saw this earlier, right? I saw it when it was already here, and I'm just like, maybe it will come and retest it. It didn't. Regardless, if it come down, I have a buy order at the 20. If it come anywhere into the 7.3 range, I am in. My buy order is at 7.35, and I wouldn't mind chasing it here, right? If I see a retracement into the 7.4, I might nip some share and then add more down at 7.3, but I like it here. I do think a 20% return is in the card here, right? Can this thing get to the 9? Yeah. That's a 25% return. You know me. 10% chance of return is, I love it. 20, love it more. 25 or better, what's not to like? EL also bounced nicely, right? So it's not just ELF that's doing well, but EL, if you have it, if you bought it on the tax loss dump, yay. You did good. You got 20% return already, right? Yes, already. Stay greedy. You might get another 10%. Okay, you might get another 10% into the gap fill, right? For sure. 86.5, yeah. Confluence with the 100 MA, but that will be the first spot to trim. I'm not trimming a lot of things that I liked. Not yet. Especially if you buy on a tax loss. Now LULU, very good earning last night. Is the bottom in? Well, for now, that's what the market is saying. And pre-market is looking at 370 something. I don't have anything here, so I don't care. I do think if you have it, my advice always on any stock is take the pop after hour or pre-market to trim some. A lot of time you don't see the high after hour or pre-market during regular trading time. A lot of time. I'm sure those that pay attention to my philosophy would agree that that happened a lot of time. There's nothing wrong to trim. If you love it, the stock, you can always trim pre-market or after hour and buy it back lower in the regular trading time. So I think it would not be unreasonable to see right now. See, ref high is 370-ish, right? Let's see, 370, 360. Let's see, 368.36. Okay, so right now it's 373, but watch out. That could be the area where it will be a resistance in regular trading hours and it drift down to this. Okay, so just be careful. All right, let's end this on the 2 tax loss October that I bought and still holding on to. Earning was okay. DG, Dollar General, was not as good as Dollar Tree. I couldn't take the risk of first of all, I bought on a tax loss on a sign put. My cost was just over 80. Okay? It was like 80.2 or something like that. But I was selling put for a while. So net, I think my average cost, if I factor in all the profit I made from selling put, my cost average is probably in the 79 area. But last week, I couldn't take a chance on it going down to 72 again. So when it was hovering up here, I saw a cover call because there was a lot of juice given that earning is this week, and that was can it be the wrong decision? No. If this thing is over 80, where my cover call is, they can take away the share for now. I will return. I will flip into selling puts again. But for now, the cover call will knock my average cost down to in the 76 area, which is fine. I do think up there, right, in the 90s, in low 90s to mid 90s is where I am aiming for the next couple of weeks. Dollar Tree, better. Now this one, my average cost on my share is 66-ish, so it's doing well. It's already near the 20% return. It is 20% return because I also sold cover calls on this one. I sold the cover calls at, of course, at 80 last week as well because of earning, and also get myself $3 deal on here. So yeah, now my cost average is 63-ish. Yeah, the 20% return is within sight for that one. And as far as selling, I would consider exiting some here and the gap fill for a nice fat 40% return. Yeah. All right.